Good afternoon. I'm with Gwen Preston of West Red Lake Gold. WRLG is the symbol on the TSX. Still a venture, but we might upgrade soon. Who knows? We'll have to see. Gwen, how are you?
I'm doing very well. How are you?
I'm excellent. In rainy South Florida, although this is an AI background. It's not actually raining right now. It's a rare occasion. It's not raining right now here in Fort Lauderdale. So let's talk about gold mining in Red Lake, Ontario, West Red Lake. A lot of updates in the last couple of weeks, including Q3 operations. So give us the full rundown on what's happening at the Madsen mine.
Yeah, for sure. Thanks for the opportunity. We put out last week, I think it was on October 7th, we put out sort of a Q3 update. What have we accomplished at the Madsen mine in July, August, September, as we go through this ramp up? And really that Q3, call it half of ramp up. We started in June, but really we're expecting to declare commercial production in January. So we're basically halfway through the ramp up phase for this mine. And so why does it take 6-7 months to ramp up a mine like Madsen? Well, because there's a lot of things that you're doing at the same time. I mean, you don't wait until every single aspect of the operation is totally ready to go before you start mining, because it's useful to start making cash flow earlier than that. So there's projects that are still underway that will be part of how the mine operates when it's in its regular, consistent state that you're still working on during the ramp up. So that's really the story of what it's been so far. And we're really happy with how it's progressing. Like one of the key chart, I would say, in that update that we put out last week is about tonnage coming out of the mine. And it's moving higher, like consistently within the variability that is, ramp up, where, some months you have a bit more development to access new areas that you had to do that takes away from the ability to mine ore. But within that range of variability, we're really happy with how the number of tons coming out of the mine of ore are ramping up, and we're confident that we're on track for that, very early in 2026, achieving commercial production. And when I talk about there's aspects of the operation that you're still getting going, there's two that are really important. One we have now accomplished, and one we will accomplish soon. So the one that we have accomplished is figuring out how to move less waste. So all the time when you're, accessing new areas, you're mining unmineralized rock, right? You're driving tunnels over to new areas, and then you got to do something with that waste rock. And until a month ago, we were trucking all of that waste rock up and out of the mine. And so that was like 300 to 1,000 tons per day, again, within that variability of waste rock that we were trucking out of the mine. That's a lot of trucking taken up by waste rock. We knew that in time, at least, we would be able to start storing our waste rock underground when we'd created enough of our own mining voids to start shoving waste rock into them. But as we got deeper, we were able to assess the few historic voids from the old mining that were left empty. Most of them were backfilled because the old timers also didn't want to move waste. But the few that were left void, we were able to get into them. And one in particular is much bigger than we expected, so much less backfilled. And we've been able to start putting all of our waste rock in there right now. So now we're not trucking any waste rock out of the mine. That's a really significant change from a couple weeks ago, given that the critical path for getting Madsen into production is just moving more tons out of the mine. This is like a fixed cost mine mostly, right? Our costs are labor and their equipment, fuel, maintenance, all of those fixed costs. So you got to move more tons, produce more gold at the costs that you have. That's the ramp up equation. And so not having to truck the waste and instead being able to truck the ore, really big achievement for us. So that's the one that happened. And the one that's coming is similar, which is getting the shaft going. So once the shaft is going, we're waiting for those last few components for the hoist. Once those arrive and are installed, we're expecting to start moving 350 tons per day up the shaft instead of trucking them. It takes an hour for a truck to get from where we're mining out of the mine, and the trucks move 42 tons at a time, right? So you can wrap your head around that logistical challenge pretty quickly and see that moving 350 tons every 24 hours up a shaft at like 1/10 of the cost, that's something we're pretty excited about. So these things are coming into place we're really confident that they're enabling us to ramp up to our goal. And Madsen's going to get where it needs to go. So yeah, it's fun times.
So there's a key difference between total tons of ore moved per day and how much ore actually gets fed through the mill. So can you explain to us those two numbers and why they're slightly different, you know, on a given day?
Yeah, for sure. So I would say in June and July, in our first months of ramp up, we really wanted to test the mill. We really wanted to get our heads wrapped around what the mill could handle, you know, as a new to us piece of machinery. And so we used some of the stockpile material that had been left over from the bulk sample and this and that. And we pushed that mill up, you know, past 800 tons per day a couple times. But that was well beyond the amount that we were mining on any given day. It's because we had that stockpile to also put in. Now we're basically doing mine to mill. So there are some stockpiles on the side, the fallback stuff, but we're doing mine to mill so that we can. So now what's coming out of the mill is a very close reflection of what's coming out of the mine. Now, when we talk about ore tons and grade and therefore contained ounces over a month or a 3-month period, and that doesn't exactly match the produced ounces, that's because a mill holds on to some of its gold. You know, there's gold in circuit. The carbon filters have some gold in them. You take one filter out at a time and 4 others remain in place. So, and then there's timing issues. Maybe we pour gold on the last day of the month, but we don't actually get paid for it until the next day, or, you know, there's these timing issues. So those are some of the factors that can play into the differences of the ounces.
Okay. So in Q3, 35,700 tons of ore at an average grade of 5.4 grams per ton gold. The mill poured just over 7,000 ounces of gold. Average selling price $34.56 per ounce USD for gross proceeds of 33 million Canadian dollars. So those are pretty good numbers. The one that stands out to me as room for improvement, how do we get the 5.4 grams per ton gold up above 6? Because I know when we modeled this, we wanted to see that grade get above 6 grams, right?
Yeah, I mean, the gold price environment matters here. So, you know, mine engineering is, as you well know, it's like an economic exercise as much as it is an engineering exercise, right? They're one and the same. So you use a gold price, and that determines how much of the halo mineralization is haze to mine. So that actually ends up determining what your grade is. And so it's actually a choice as opposed to like a stumble. It's a choice. Now, we're in this crazy move in the gold price. You certainly aren't ramping up your engineering gold price at the same pace as the gold price is moving in London, because, you know, you're going to be more conservative than that. So we're still engineering at about that $2,400 gold price. And so that does mean that sort of the 5.5 to 6 gram range is where we're probably going to sit. And so if that's what you decide, because it's a more efficient mine, it operates at a lower cost per ton or per ounce, and it gives you more tons over the life of mine that you're gonna mine. So it increases the extractable value of the resource over the life of mine. That's the choice. If you do that, then you're doing that because you should make at least the same, if not more money, because that's the economic exercise. And then if you want to up it from there, then you try and up it by tons. You put more tons in. And so like our goal by the end of the year is to be getting 650 tons out of the mine every day, very consistently. That's our commercial production. And then through next year, can we increase that? Can we increase it by 100 tons per day? Can we get ourselves up to 800 tons per day, increase it by 150? That would be the difference. So I totally get that this is a high-grade gold mine and that the prior operator really failed on scale. So everybody's focused on grade, or failed on grade. So everybody's focused on grade. But for us, grade is a bit of a choice, and we're focused on getting tons out at the grade that we chose. So long answer to a short question.
Okay, I got it, and I'm glad I asked the question because that makes perfect sense. More ore and lower grade ore is more profitable at 3,400 than it was at 1,700 when the previous operator failed, right?
Exactly.
But let's talk about high grade, because you put out a news release just recently about, some high grade intercepts at the Austin zone. So what does that mean in terms of being able to mine some higher grade areas here soon?
Yes, so those drill results are really exciting. So they look like the kind of phenomenal drill results that we were putting out in the first half of this year that were from the South Austin zone. So just in general, we've got some zones in our deposit. There's South Austin, and then there's Austin, and then there's a few other bits around, but those are the two biggest chunks of the deposit. And there's 1 million meters of drilling that's gone into this deposit when you include all of the historic stuff, right? Like, there's a crazy amount of data on this system. And that data means that our geologists have a bunch of targets that they're excited to get to. A bunch of them are parts of our current resource where they're excited to get in there and tighten up the drill hole spacing to see if those areas actually host more high grade than the wide space drilling saw. And other targets are outside of modern drilling, but historic data points us there. And the reason those targets are so exciting is because Red Lake rocks are hard work, right? The mineralization is not continuous, and you got to do all this tight space drilling to get the model and all of that. But if you do the work and you get down in and you're able to look around and you have the data and you have the targets, then you can get rewarded with these really nice pockets of mineralization that are much more strongly mineralized than the rest of the deposit. It's happened at the Red Lake mine down the road repeatedly over the last 80 years. That's how that mine built Goldcorp, is with those pockets. I mean, the fact that it has produced consistently for 80 years is a great thing as well. But within that, there were a bunch of really great years because of these pockets. So Madsen has had those pockets before, for sure, in the 40s, 50s, and 60s. Our first such pocket to find as West Red Lake was that zone in South Austin. Now what we announced last week is the next area that we went to start looking for the next one returned these really hot drill holes in our first set of drilling. And so that's a new high grade zone lower down in the Austin. It's also really cool that we're getting deeper now. So the deeper we get in this system, we certainly get away from the parts that were picked over the second and third time by miners. Those are the mining attempts that happened in the 2000s. And now we're into the area that was only mined historically, which opens up the amount of opportunity. And eventually we'll get below the area that even the old timers, or around outside of the areas where the old timers mined. In fact, this area, this lower Austin, wasn't mined by the old timers because they had some vent shafts that ran through this complex that they weren't really willing to jeopardize. So this is an area that they didn't go to. So really cool to find these high grade pockets, these jewelry boxes, as they're sometimes called in Red Lake. Really gratifying to find the second. The first one that we found in South Austin, we'll start mining that in December, and it'll be a significant part of what we feed in the first half of 2026. I bet that we'll get down to this new one in a year. So like in the second part, like, I don't know, a year after we start mining this one, the South Austin one, hopefully we'll get down to the Austin one at the end of 2026. So these are also fairly near-term value things that we're finding.
Yeah, so I was just about to ask you, that higher grade panel at South Austin, where does that land in the stope sequencing? Will that get mined in the next year?
It will, yeah. So when I talk about accessing new areas, I mean, accessing new areas is a consistent part of mining, right? You always mine out an area, but then while you're mining here, you're always driving the tunnels over to this area so that you can mine there next. And when you look at when I look at our 2025, second half of 2025, mine plan, there's the areas where we're really focused on mining. And then there's the areas where we're getting ourselves over to it. So they're taking a lot of development right now, but we're setting ourselves up. You've always got to be setting yourselves up for the next few months. So that high grade panel in South Austin, we will start taking down stopes there in December. And then that will be a big part of what we're feeding into the mill in Q1 and Q2 of next year. So it's exciting. It's right around the corner.
Yeah, so we're talking about grades like 8.7 meters at 75 grams per ton gold, or 5 meters of 49.7 grams per ton gold, or 7 meters of nearly 20 grams per ton gold. This is really high grade stuff. I mean, this will make a difference in the economics when you get down there.
Yeah, for sure. And these things, it's not like it's not like there's hundreds of meters of consistent, that kind of grade. But when you get into these zones, there's sort of like multiple lenses. And as long as you do the tight enough drilling to understand where they are, for sure, they're, you know, the classic story is that Goldcorp was born basically when they found this kind of pocket, slightly different geologically, but nonetheless, this kind of high grade zone at the Red Lake mine. And that, I'm not saying that is what's going to happen at Madsen, but that's from that mine from 50,000 ounces a year to 500,000 ounces a year in the space of 3 years. So I'm not saying that's what's going to happen here, but grade matters. Like it matters.
Goldcorp was, a lot of people forget about Goldcorp. I'm old enough to, you know, recall the good days of Goldcorp. I was much younger. I was in my 20s then. But Goldcorp had an incredible run in the 2000s during a gold bull market, 2004, 2005, and 2006. And actually, there was a period where Goldcorp was the darling in the gold mining sector. So it was the stock that everybody in the U.S. bought when they wanted to buy a gold miner. They bought Goldcorp because it had the best margins, it had the highest grades, and they were a cash cow during that time. And then obviously, I think there was a management change. We had the global financial crisis. It didn't end on a great high note, but during those years of the gold bull run from 2001 to 2008, Goldcorp just was a cash cow.
Yeah, it was the Agnico Eagle of those days, for sure. Yeah, absolutely.
It was absolute cash cow. Okay, a little bit on corporate strategy. Okay. You said you guys are gonna, I guess, finally make it official in January, but what's on the agenda in terms of maybe going to the big board and then maybe going into the US? I mean, Dolly Varden has had good success with their, you know, being on the big board in the US. Obviously, perfect timing with the Silver Bull run here in 2025. Maybe it's time for West, Red Lake to go to the US.
I personally agree strongly with that statement. And I say that with a bit of a smile because I would love us to be trading in the US and particularly to be trading, you know, with a price above a share price above $3, right? Because that's sort of the line that lets a lot of money start to participate in a stock. Now, to do that requires to start listing on a big board in the US requires a bunch of legal work and financial work. We got to do different financial reporting. And so as we've been ramping Madsen up, like in 2025, we just didn't internally have the capacity to take that bite. I would love us to take that bite in 2026. I think it's a really, it could bring a lot more. It would make a lot more investors able to participate in the stock. Now, whether we do that standalone, it would, you know, if we were to do it standalone, it would require a rollback so that we get that share price. You know, there's lots of factors to consider. It is not something that is currently planned. But as we get Madsen up and running and are this consistent gold producer, as we consider other growth opportunities as a company, it's absolutely something that's on our radar, something that we're interested in doing.
2026, West Red Lake Gold goes to the NYSE. I'm calling it right now. You'd be an official gold mining company and in a gold bull market. It's the place to be. So final question. We saw the average sale price for Q3 was about $34.50. Well, now we're above 4,000, Gwen. So I'm kind of interested. When do we get an update from the company that says the average selling price was 4,000, blah, 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 blah?
Yeah, I mean, these prices are insane. Like you just wake up every morning and you look and gold is up another %. And it's just a phenomenal thing. And it's this really interesting moment, I think, for all of us who are in gold, because we did expect this to happen. We talked for years about how this was going to happen and it should happen and it was justified. And I still very strongly believe that the forces that are propelling gold are very justified and have a lot more push to give. But it's nonetheless hard to wrap your head around, you know, the speed and scale of the move in gold. So I hope it's very soon that I give that report. But I don't have a crystal ball, so I don't want to like lean too hard on it.
Yeah, I was just teasing. It'd be nice to see those numbers. It is. We are up. Gold is up. Not we, but gold is up. $900 an ounce since mid-August. $900 an ounce.
That's
Wow, it's
crazy.
a big move. And
That's
it's, even
crazy.
for us long diehard bulls, it is still pretty shocking to see this kind of
Yeah.
a move.
Exactly. It's still, even for those of us who have spent a lot of time thinking about it, it's hard to understand.
Thank you, Gwen. I appreciate your time.
I appreciate being on. Take care.
Cheers.